Hello and welcome to another Consolidated Credit webinar. I'm joined again with our Executive Director, and today we're going to talk about student debt. So Jeff, thanks again for joining us.
You're welcome. Happy to be here. And Ben, this is a really important topic. On the one hand, I view student debt as a form of good debt because it is being used to improve yourself and your potential. On the other hand, debt is debt, and it's going to carry an interest charge. It has to be paid back, and less is better. But we'll get into this later on in the webinar.
For sure. So we want to focus today on, just like you said, graduating with good debt. So what exactly does that mean? As with most of our videos, a big part of what we're going to be talking about is the planning process. The reality is that most students are going to be graduating with some sort of student debt. And as we see there, not many students will have the option of withdrawing from a registered education savings plan either. 67%, according to that CIBC education poll, have no option of withdrawing on an RESP. But don't let that let you down, because as we'll see, if student debt is handled correctly, it can actually be a great first debt to take on. So if it's likely that you'll be graduating with student debt, then you're going to need a spending plan that gets you through school and helps you pay down your debt afterwards. So with tuition costs rising across the country, more and more prospective students will have to look to student loans to help fund their education. So we're certainly going to look at how student loans work. We'll look at the basics of interest rates, terms, as well as how and where to apply for various student loans. And of course, like Jeff mentioned, the best loan is the one that you don't have to take. So there are literally thousands of awards, grants, bursaries out there. All you need to do is find them and apply for them. So be sure to check out your financial aid office's website to learn more. Each school handles applying for awards a little bit differently, but the information should all be there. We've also compiled a list of some great websites at the end of the presentation that can help you with applying for awards and finding different scholarships and bursaries that are out there. There's also a ton of companies and nonprofits that offer scholarships and awards too. So take some time with Google and just find out how much money is out there for students, because there is a lot of it. And of course, if there's any Seneca students listening, don't forget to apply for the Consolidated Credit Financial Empowerment Award. That can help you out quite a bit. And then finally, we're going to take a little bit of a look at repayment options and strategies for paying down your student loans. And then that will hopefully leave us enough time to cover some questions. So getting on to good and bad debt. Jeff, with all of your experience in the credit counseling world, what would you say is the biggest difference between good and bad debts? Usually when I say good debt in a workshop, people tend to laugh and say, is there really such a thing? I don't think it is. Can you just shed a little bit of light on good versus bad debt and kind of how they're treated in regards to your credit history?
Yeah, sure, Ben. That's a really interesting question. Whenever good and bad debt comes up, the first question you have to ask yourself before even looking for a loan is really, why do I need the money? Mortgages or property are probably the best reason to take on debt. It's not that common for a house to lose value over a long period of time. But don't get me wrong, as we saw in 2008, things can go wrong quickly. But by and large, over time, a home will gain some value over the years. Also, not many people have hundreds of thousands of dollars or even millions of dollars in cash lying around to buy a home. So for many, taking a mortgage is the only way to buy a home. The same goes for education. Not many prospective students have tens of thousands or even hundreds of thousands of dollars that needed for their education just sitting in a savings account ready to fund it. Instead, many are going to apply for a student loan, and ideally they'll start paying it back just after graduation. Now, those on-time payments are reported to the credit bureaus, and that's what helps start building good credit right out of the gate. Now, later in life, you'll need that good credit. Say, for instance, if you wanted to apply for a business loan. Now, starting a business is a huge risk, but it's also a great reason to go into debt. So if you can show that you took that risk and paid off that loan according to the terms, then that will definitely be reflected positively in your credit score and on your credit profile.
Good. Some great points there. And if we were to take it back to your original question, what do I need the money for? If the answer is something along the lines of, I need it to live, I need it to pay for my bills or my necessities, or, an unplanned emergency happened, so I use the credit card, then I would say stop. Don't take the loan. Look for help instead.
Yeah, you got it, Ben. I think it really helps to take a look at what exactly the loan is going to be used for. Is it for something that will appreciate or depreciate in value? For instance, a home versus a car loan. If it's going to hold its value or even gain some value over time, then yes, that's a reason to take on debt. But as you said, if you're using credit card to make ends meet, then stop. You're only delaying the inevitable, and having a conversation with a nonprofit credit counselor might be in your best interest at this point. They will help clarify your situation and offer some solutions that can help.
Right. So, help, just like the truth, is out there. So now we'll just get back to making the financial plan so we can try and avoid all the nasty bad credit stuff to begin with. And seeing as we have a resident financial expert here, Jeff, would you mind just highlighting the importance of planning for student life, as it sounds like you have a bit of experience there. What are some things to look out for, and are there any strategies or things that you can recommend that work well when trying to plan for this expensive time of life?
Well, Ben, you really have to go back to the basics here. Look up the hard numbers. How many years is the program? What's the cost of new and used textbooks? What about living expenses? The costs for housing vary widely across the country. So when it comes to housing, look it up. How much is a 1 or a 2-bedroom apartment in that area? Will you be staying in a dorm? How much is that per year? If you're moving into a shared apartment or house, how much will that cost? Close to campus, or will you commute? Can you cut housing costs entirely by living at home? The point is, get the numbers in real dollars and cents and then start making the rest of the budget. Once you have some estimates on how much it's going to cost for food, rent, and for bills like your cell phone or internet, maybe hydro if it's not included in your rent, you can get to the easier part of your budget, and that's the money. How much money will you have available? And where will that money come from? These are two very important questions you're going to need to answer. And is there any savings available? If so, how much? What's the dollar amount you can realistically save from your summer job? If you take a year off to work, how much do you need to have saved for school? Now that you've got an idea of how much 1 year of study and living will cost and how much money you'll have to work with, you can begin by subtracting the expenses from your savings and your income. Now, if you add up all of your available income and savings and subtract your expenses, it still might not be enough to fund your whole program and living expenses. If that's the case, you'll have to look to student loans to make up the difference. So how much will that cost? Having an idea of how much debt you'll graduate with will be a big help when trying to come up with a financial plan after graduation. So pay attention to the interest rates and terms. Those payments will have a big impact on both your credit score, but can also eat into your future cash flow, possibly delaying other financial goals like buying a car or even a home.
Right. But don't let that potential for future cash flow issues keep you from looking at student loans. Making a plan and sticking to it can prevent any of that. Also, in terms of lending, student loans are pretty reasonable. I would guess that if an 18-year-old with no credit history walked into a bank and asked for a $50,000 loan at 6 or 7% interest for the next 9.5, 10 years, they'd probably pretty quickly be denied. Apply for a student loan, however, and you'll be approved based on your academic need. That is, how much your allowable education costs and living expenses are, and your expected financial contribution. So expected financial contribution just means the expected contribution available from you and your parents' income and assets. Adding together all of your allowable educational costs and expected financial contribution is going to give you something called your calculated financial need. If the calculated financial need isn't going to be enough to cover your living expenses and tuition, textbooks, that sort of thing, then you can make appeals through your financial aid office. Another loan option that can be arranged through banks and credit unions is a student line of credit or a student loan through a private institution. So applying as a student with proof of enrollment will also allow funding for education. However, be sure to understand these terms and agreements, as they may not be as flexible as the government student loans, and they may not have access to various repayment solutions if payment becomes a difficulty in the future. Also, an increasingly popular source of education funding might be available from the good old bank of mom and dad. Jeff, perhaps this is a good time for you to jump in, as I'd like to get your thoughts on student loans from financial institutions versus the government, as well as your perspective on the bank of mom and dad. I know that's becoming an increasingly popular bank.
Yes, it is. Well, historically, that bank has had incredibly low interest rates. That's probably why. So let's start there. There are pros and cons to the bank of mom and dad, and we should probably start by asking mom and dad how long they want their kids to be on the parent payroll. If the funds are available and the parent is happy to fund or help fund their studies, then great. That's one less loan that they'll have to pay off after graduation. However, taking a student loan and the consequences of not paying it back as a student are also a great opportunity to teach financial responsibility. So perhaps the bank of mom and dad should sit down and write up an informal agreement. They can even charge a moderate interest rate to drive home the point. This way, it's a little more involved than simply a handout, and there's less risk to everyone's credit. Which brings us to our next point. If mom and dad don't have the cash available to help directly, then they might want to look at co-signing a loan to get a lower interest rate through a bank or a credit union. Just keep in mind, if their child neglects to pay the debt, then it will be the parent's credit on the line as a co-signer.
All right, so some important things to think about there when looking for your loans. So, getting to repaying your loans, that's our next slide here. For government student loans, you're going to have a 6-month grace period after graduation before you need to start making payments. But you might want to start with those payments right away, as interest is going to start accumulating immediately. Now, you have some options when it comes to paying the interest. You can start making full or interest-only payments right away, like as soon as you graduate. That's always a smart idea. You can also pay the interest in a lump sum before the payments start, or you can have the amount of interest that accumulated added to the total value of your loan. So the decision is up to you, but it's going to depend largely on your financial situation at graduation. My professional advice here would be to start making payments as soon as you graduate, but if that's not realistic, then you want to speak to someone at the National Student Loan Service Center regarding the repayment options that will work for you and can help you if you're not going to be able to make those payments. If your loan is with a bank or a financial institution, then you'll have to look to the terms of your agreement. Most banks and credit unions have a similar grace period. Some are even as long as 12 months. But just be aware that the terms and rates will vary according to the lender. So make sure you not only read the agreement, but that you understand it. Make note of the interest rates, repayment terms, what happens if you don't make your payments, and as I've just mentioned earlier, financial institutions' payment terms and assistance they can offer might not be as flexible as a government student loan. So be sure to check there first. So what's it going to cost to repay the loan? Well, monthly payments take into account your loan's principal amount, so how much you needed to borrow, plus the interest rate. And with government student loans, that's set by the Bank of Canada. Those factors are going to determine your monthly payment, but if you have the option, making larger payments is always a smart financial strategy. And if you want to get out of debt even faster, then you want to put any extra money on that loan. Student loans are often considered open loans, so that means you can make extra payments if income becomes available. For instance, maybe some of the money from your tax refund or other irregular sources can be applied to it. So those lump sum payments will go directly on the principal, which is going to both reduce the amount that you owe and the amount of interest that's included in each payment. For government student loans, you'll often make one payment through the National Student Loan Service Center. In some cases, and depending on the province or territory you live in, your loans might be non-integrated. And what that means is you're going to have to make one payment to the federal government and another to the provincial or territorial government. But these payments are easy to set up online, and they're the best way, or one of the best ways to ensure that you don't miss a payment is to set it up as an automatic payment or a direct debit from your bank or financial institution, and it'll come right out of a savings or checking account. But what's going to happen if you can't make the payments? And as we see there, a lot of people do have trouble trying to make their payments after graduation. So a whopping 68% of graduates need help repaying their loans. So the point here is to get help as soon as you think you'll miss a payment. If you go into default, your loans will be turned over to the National Student Loan Services Collection Department, and that means more than just negative credit ratings. To recoup the money from an outstanding debt, government student loans can be collected through withholding tax returns and HST deposits, as well as pursuing legal action. It can actually get pretty nasty. I mean, it is rare that it comes to that, but it's something to be aware of. And you'll also be ineligible for future student loans if you want to go back to school until your account is paid up and in good standing.
Yeah, that's right, Ben. And if you think you'll be late or might default on a loan payment to your government student loan, your first call should be to the National Student Loan Service Center. They can provide you with several solutions, including the Repayment Assistance Program and other income-based solutions to help you get your student debt under control. Now, if the student debt is compounded by other debts like credit cards or lines of credit, then you might be better off speaking to a credit counselor to help clarify your situation with a free, confidential debt and budget assessment. And if your situation is severe enough, speaking to a licensed insolvency trustee might be also a good idea. If you've been out of school for 7 years and are still struggling to repay your student loans, they can be included in a bankruptcy. But this should be only reserved as an absolute last resort, as it is a lengthy process with long-lasting implications to your credit profile and your financial situation.
Great. So our next slide here is going to be all about those life expenses. A big part of your planning is going to involve, how much is it going to cost while you're living and in school? How many of those years is that going to be? 3 years, 2 years, 4 years? Are you going for a PhD? It could be 10 to 12 years. Also, where you live, like we mentioned earlier, is going to have a huge impact on how much you'll be spending on rent, utilities, even your grocery bill. So take some time to find out how much it's going to cost to live where you want before you sign a rental agreement or a lease. Of course, if you can live at home for some or all of your schooling, then you're going to be saving a ton. But that's not always a realistic option. So be sure to check out all of the options that are available. If you're going to be living on campus in a dorm with a meal plan, that's going to be a little bit differently than, you and some of your friends sharing an apartment off campus. But, know the costs for both. It may help to make a pro and con list for each, and you can choose after you've decided, what is going to be best for your situation. So Jeff, can you just enlighten us on the careful balancing act between income and lifestyle, especially during school?
Yeah, Ben, I'd be happy to. Balancing income and lifestyle is a difficult thing to accomplish, whether you're a student or not. And going to school is often the first time many young people will attempt some sort of a budget. And those can be great lessons that they'll hopefully carry with them on into the future. The problem isn't paying for tuition or textbooks. That's pretty simple math. The hard part comes when you have to pay the bills, maintain good grades, and have some semblance of a social life. Throwing a job into that mix can give you the opportunity to earn some much-needed cash, but it's also another set of responsibilities to handle on top of everything else. So take some time and see what will work best for you. Will you work part-time and go to school full-time, or does it make sense to work full-time and study part-time, perhaps picking up a class or two in the summer semester? That choice is up to you. And yes, it could mean an extra semester or half a year in school, but it could also mean thousands of dollars less in student debt.
Right. And as I mentioned earlier, don't forget about those irregular sources of income. Many students will receive, a pretty sizable tax refund. Being a student often means, a low annual income and access to tax credits like the tuition and textbooks, loan interest, things like that. And that can lead to a substantial influx of money in the spring when you get that tax refund. HST deposits, those occur throughout the year. So again, come up with a plan for that money before just spending it as fast as possible. With smart planning, irregular income throughout the year coupled with your regular income from your job or savings can all play a part in reducing the amount of student debt that you're going to graduate with. So if you're taking some time off between high school and post-secondary school, definitely set aside a few numbers and start crunching those numbers. I know doing math over the summer sounds horrible, but if it's going to save you thousands of dollars in loan payments and interest, then I'd say those hours are worth every penny. And now that should bring us to our next point, which is about credit. A word on credit. Credit card companies market to students for a reason. Most people will actually keep their first credit cards for 15 years on average. So this is a great marketing opportunity for banks and financial institutions, but it also presents a great opportunity for you to start building your credit at a very young age. But, pro and con here, it also has the potential to damage your credit right out of the gate. Late payments and debts that get sold to collection agencies have a long-lasting impact on your credit. So, since we have a credit expert with us today, perhaps, Jeff, you can just comment on the students and student credit card use, that sort of thing.
Absolutely, Ben. And just before I get into more details, that's what I did with my daughter. As soon as she started off to university, we sat down and had a chat about her credit and how it's going to be so important for her beyond her schooling. and that she needs to start building that credit right now. And she got a student credit card, was approved right away. It's under her name only, but she has the responsibility of making sure that she makes those payments in full and on time every month. And hopefully that's going to stand her well when she graduates, and if she needs additional financing, and she'll have good credit to stand on. So before that, I mean, as we mentioned before, student loans, lines of credit, and credit cards can actually be a good thing if handled responsibly. Those credit card rewards and cashback bonuses are other great conveniences that you can get with cash. But on the flip side, if that credit card debt spirals out of control and your student loan payments are late or in default, your credit can suffer for years. That means delaying financial goals even longer, not to mention the financial stress that never seems to end. The collectors keep calling, threats of legal action continue, and tax refunds are withheld. So, before you get to the question of signing up for a credit card, ask yourself these questions first. Why do I want a credit card? And can I afford it? And if you don't have good answers for either, pass on the offer for now. Go back to your budget. Simple elementary school math here. Income minus expenses. If it turns out that you're able to pay your bills with ease, then why not put your cell phone or internet bill on your credit card? Just be sure to pay it before the due date. Now you'll be using credit to pay for something you need. You'll be building your credit history, and you can also get some cash back or reward points at the same time. Another benefit of putting some regular bills on your credit card is that you have the chance to leave the card at home. If it's not in the wallet, you'll be less likely to take your friends out for pizza or buy them that round that you can't afford. Ben,
right.
one more thing I want to add here, and I alluded to it at the beginning of the webinar. Debt is debt. If we can avoid it, it's important to do so. So just because you've been awarded a student loan, it's not winning the lottery. It has to be paid back. So if you don't need it, don't use it. The less you use, the less you're going to have to pay back.
Right, and don't expect the government student loan people to tell you that, you don't need that much, or we're going to give you this much. I know in my experience, they just kind of said, here's the amount we're going to give you, and I kind of, like a lottery, said, yes, please. I probably could have got away with a little bit less than what they were offering, but, I didn't take the time to crunch the hard numbers like we've been talking about. So that'll bring us to our questions and the end of our presentation. So if you want to avoid the whole loan process to begin with, like we've mentioned, that's usually the best loan is the one you don't have to take, then that list of websites there will connect you with all the awards and bursaries that are out there for prospective and current students. So go ahead and take a look at what's out there. But now we have a time to cover a few questions, and the first one is, when can I apply for student loans? Well, you can apply for student loans pretty much any time before or after your school year begins. I'd personally recommend that you send your completed application and documents no later than 8 weeks before the end of your current semester for the next semester. That's the earliest you can apply, but generally people are going to wait till the last minute, which can cause a backlog. So apply early, avoid the holdup. And we have another similar question that comes up quite a bit, and that is, when should I expect to receive my student loan? Disbursements of student loans are normally done at the beginning of your first term and at the beginning of your second term. The first disbursement, like I said, depends on when you apply. So again, apply early as soon as you can, and you'll avoid some of that backlog. And a final one, the question that our counselors get quite a lot is, what is the impact of bankruptcy on my student loans? Well, if the student loan is over 7 years, like we mentioned, from your anticipated graduation date, then you can include the student loans in bankruptcy. But also, as we mentioned before, this is an absolute last resort. But perhaps Jeff can shed a bit of light on the seriousness of bankruptcy as it relates to your student loans and credit history. So Jeff, can you just kind of take us through, bankruptcy, how severe it is, and just sort of the seriousness of it in relation to your student loans?
Sure, of course, Ben. Our counselors see a lot of people struggling with debt, and a large portion of that debt tends to be student and credit card debt. Your best bet is to clarify the situation and start looking at the solutions that are out there for you. Speaking to a nonprofit credit counselor can help you with both. Your situation might not be as dire as you think. Getting help with the high interest rate credit card debt can often free up cash to make payments to your lower interest student debt. Bankruptcy needs to be the last resort. And often there are options out there that people aren't even aware of. The point here is to get help. And if it turns out that, yes, your situation is bad, then personal bankruptcy is going to help put all that nasty debt behind you so you can start moving forward and get a fresh start.
Right. So help is out there. Don't be afraid to get it. And, you might want to speak to a counselor just to, like we said, clarify your situation and explore some solutions that are out there. But if you or someone that you know needs a little bit more financial education, or you're interested in learning how our financial wellness platform, Coffee, can help you with your organization and combat financial stress, please feel free to contact me for a free demo. You can step into our credit dojo, learn the ways of the credit master, or you can chat with a financial coach or sign up for a webinar. It can all be found at coffeetime.ca. So Jeff, this concludes our webinar. I'd like to thank you for taking the time to speak with me, and I hope you have a great day.
Pleasure. Have a great day.